Hey guys, this is going to be the second episode in our series in which we explain the DICO and how it solves a lot of the core problems within crypto. So let's first define a few core problems of crypto. There's lack of accountability, we see lack of transparency, no incentives for investors, what else? Scams, of course, lack of utility. What does the lack of utility mean? It means that companies do not build what they say they build out some equity company. Inflation, that's a big one. Companies telling you we're not gonna unlock these tokens, or these tokens are smart contract locked when they're not locked. So they dump on investors. Big one is no incentive for success. So it's a very big one, a very big problem in crypto. What does that mean? Basically, if a company raises $1 million in ICO and it stops working right away, then they just made $1 million. Now, if they keep working, then they start spending that money. So it's counterintuitive in terms of incentive for working, because there's no benefit, but there's a lot of incentive to just scam people and leave. So that's what happens all the time. Another one is discounted token prices. So what is discounted token prices? It's just basically VCs telling them, okay, I'm really good, so give me a better valuation. So they give 30% price reduction, which makes sense in an equity model, but not in a hyper liquid model. Because in a hyper liquid model, they can just take their tokens, essentially three tokens, and this pushes the price down for everybody very quickly. No accountability. So if a company is a scam, it almost always gets away. Actually, it's so bad that in an ICO, you can scam people for millions of dollars, make sure that the token pumps for a few days, and then no one's going to care, right? Because the investors made some money, or at least some of the investors made some money, and who cares about the people who hold bags, right? So it's really, really easy to scam people with an ICO and get away because there's no accountability or investor protection. So how does the DICO solve this problem? What the hell is a DICO, and how does a DICO solve all of these problems? That's what we're going to get into in this video. Let's first get started with the DICO overview and how it works and all the basics. So in this example, we have a chart that goes up and goes down, and let's take a look. So a DICO essentially has a market cap static and a market cap dynamic. Market cap dynamic is in this example shown here by the green line. So it would be this or this. This is the market cap dynamic. Market cap static, as the name says, remains static. What is market cap static? In a DICO, a company will receive 20% of the funds on day one, and the rest of the money only if they achieve their goal. So let's say the company raises $3 million. So from those $3 million, they initially will get $600,000. So let's put this 600K to start development. Maybe they have some private funding, they have some initial funding, but okay, they get $600,000 funding. Now $600,000 is, in other words, $50,000 per month for 12 months. So that's a good bit of funding for an initial startup. That's enough to more or less build out any problem, solution to most problems without scaling too much. From the $3 million, we now put $2.4 million into an escrow smart contract or an escrow service provider, custodianship, which ensures the money. So this money is then sitting in some cold storage and is insured by this provider. Now, 2.4 million is what provides the market cap static. 2.4 million is also, in other words, 80% of 3 million. So the market cap static is 0.8x as shown here. Okay, now that's clear. Let's move on. So in this example, the chart went up, went down, and then up again. We have three more lines, line 1, line 2, and line 3. These three lines represent the refund dates. There's a refund week in 9th month, a refund week in the 12th month, and a refund week 16 months after the token generation event. During these 3 dates, a few things will happen. On these 3 dates, people can take the tokens that they own if they participated in the DICO and then refund the money. So if a user or a DICO participant purchased 1,000 tokens at a token for price of $1 per 1 token, then on the 9th month, this user can refund up to 250 tokens and will receive, put this T here, and will receive $200. Why? Because we're giving every user 80 cents for every token. We're giving them back 0.8x for every token if they want to. Right? It's a basic refundable token sale. People are quite familiar with this term. On the 12th month, people can refund 37%, and on the 6th month, another 37.5% to be exact. So, if you add these numbers up, you will realize that this adds up to 100%. Now, if this user here takes these 250 tokens and sends them to this refund or buyback address, these tokens are then essentially burned, right? They're gone. They're sent to a burn address. So, which means if you listened carefully just now, in a DICO, 100% of the circulating supply can be burned if the token price is below 0.8x. Because in an example where the token price would be above 0.8x, what would happen then? If the token price would be above 0.8x, you have your 250 tokens and they are worth, let's say, $220. But you would still only receive $200. A trade you will probably not do, because just on the market you would also not just select the trade order, which is below the current price. You would only do it if it's above the current price. So, thereby making profits or loss. Okay, pretty simple. Now let's take a look at what exactly this means as a whole. Another important thing to mention is in the DICO, 100% of the supply is refundable, as I mentioned before. So what does that mean? It means that there can be no inflation. That's very important. No inflation. Let's make this very big. So what does it mean? What is no inflation? Inflation basically in token is we sell, let's say, 50% of the circulating supply. Come on, 50%. And for the first 16 months, this 50% will stay 50% unless the token is below 80 cents at a $1 token, in which we are burning token percentage. So in the first 9 months, we are burning 25% of the supply. If the token price then still is below 80 cents or 0.8x, then people will refund another percentage of money, burning another 37%, and then after 16 months, another 37%, essentially completely eliminating this coin. Now, that's the framework of the DICO. Now, let's take a look at the dynamics of the DICO. The DICO is called dynamic coin offering or dynamic hard cap because the hard cap is dynamically adjusted. If a company is successful, it gets more funding. If a company is not successful, it does not get more funding. Companies need to be successful in order to get more funding. If the community thinks that they are scams, then these companies will essentially, as mentioned before, 100% be burned. Now that's interesting. Now let's follow a real example or a hypothetical example of a DICO. In this DICO, price went up and it's 1.2x, people started selling. So let's have our DICO participant here. All right. DICO participant bought $1,000, and with these $1,000, he now bought 1,000 tokens. Let's put tokens and $1 here. So he has 1,000 tokens now, but the price went up and his tokens are unlocked. So he decided to sell his 1,000 tokens and he made $1,200, right? Because it's 1.2x. Simple math, quick math, great. Now price falls down and we are at a point at this range here where we are falling below the market cap static. What does that mean? So price falls, let's say to an example of 0.5x. At 0.5x, our smart and happy DICO participant who just made 20% profit thinks to himself, I still like this company, I invested in it for a reason, and I have the benefits of being a DICO participant. So what are the benefits of being a DICO participant? A DICO participant can claim 4x his investment in the refund. Okay, what does that mean? It means that this investor can now buy 4,000 tokens and claim 80 cents per token in the refund, no matter what. That's his right for investing in the DICO. However, he does not want to spend more than 1,000 tokens, so he's only going to spend the money that he makes. He has 1,200 tokens, and he's going to use those tokens now, and he will he will use that money to buy more tokens. So $1,200 will get him 2,400 tokens. Great. Okay, he has that money and he's very relaxed. Why is he so relaxed? He's relaxed because he knows he already made 30% profit on his investment. What? How can he know that he made 30% profit on his investment? He knows that he made 30% on profit because all he has to do now is wait for the 9th, 12th, and 16th month, because there will be an institution that will give him 80 cents for each of his tokens. So now let's take an example where the token price is essentially below this 80 cent value. Okay, fell down and no one's happy, no one likes this token, it's a scam. So our happy investor thinks to himself, cool, I'm gonna take my 2,400 tokens, which I bought at 50 cents, and I'm gonna claim the refund for those tokens. So how much dollars can this person, can our happy DICO investor get for the refund? Well, he will get $1,920. Why? Because he gets 80 cents per token, and 2,400 times 80 is $1,920. That's cool, right? Because essentially he started with $1,000, he sold some of it up here, and then he flipped up and he flipped down. The company essentially is dead because all the refunds happened, but he almost got a 2x. He had he made a total profit of $920, even though the company did not do well. How is that possible? It is possible because of the mirror flip event. He managed to be smart as other people panicked and sold the token below the fundamental value of the token. The fundamental value of the token is 0.8. The fundamental value of every other coin is 0x, but a DICO is 0.8. So if it falls below 0.8 and you buy it, you can make risk-free profits. And this is what our smart investor, our smart DICO participant did. He made $920 profit at a company that essentially failed. Wow, that's great. Now let's take a look at the other example, what could happen. Now, we don't want to talk about our companies failing, we want to talk about our companies winning. So let's draw a winner. So, DICO starts trading, and let's take a look at what happens when the DICO starts trading. Okay, we go up, we go down, we go up, we go down, up, hit the price floor, but people say, no, I'm not going to give my money to other people. This is the fundamental value. I'm not going to be the idiot who sold it and then lost money. So it's going to go up. The company starts developing well because they want to get their money. They want to be the winners, right? Because remember, it's important to remember that if they make their investors money, then they will get another $600,000 funding, which they need. They need that funding to be successful, right? So they're going to be working very hard. They're going to launch their product. They're now essentially bringing in their utility, and token price goes up. Okay, so in this example, token price is far above the 0.8 line. So again, what happened? People started at $1. Let's draw here $1. Okay, and price is, let's say, at this point in time $1.50. Okay, so we have our happy DICO participant in our second example, who bought $1,000. He participated in the DICO and he got 1,000 tokens. And the company did well. His tokens are now worth $1,500. He's happy. He made a $500 profit. And the company is happy because they just got another $600. That's another $600,000. Cool. What does that mean? We created a great new utility token that can be beneficial for the ecosystem, can be beneficial for the future economy, and maybe make the world a bit better. The company managed to build their system. They're happy because they just got another 600K. And the investors are happy because, well, they made profits too. And that's the beautiful thing about a DICO. Now, I also mentioned in a DICO, it's important to know that a DICO does not inflate tokens, right? What does that mean? Inflation of tokens. If you start with 50% of supply, let's say the DICO sells 50% of the supply in the DICO. This 50% will not increase for 16 months, right? Until the end of this period, these 50% will stay static, unless the company does not do well. And as we've shown in our example before, if the token falls below the value, on the 9th month, 25% of the tokens will be burned, right? Then on the 12th month, another 37% of the tokens, circulating tokens, will be burned, and then on the 16th month. So if you do not participate in the burn, you are the only one who still has some tokens. So if you really believe that this company is still good and it can still be successful, then you are benefiting because everybody else burned their tokens and now you have very rare tokens. So this is a very quick example of the DICO, but before we cut off, let's go into a few more details. So what happens if the token price falls below this 80 cents? So in this example here, we have a few blue lines. The blue lines represent our smart DICO participants who are buying the token price below the fundamental value of 80 cents in order to cash in some risk-free profits. We have a second line here in purple, which represents traders. So why would traders buy this? Well, a trader can consider himself thinking, I am 100% sure that I can find some other DICO participant who will buy these tokens off me if they are below 80 cents, right? Because the circulating supply is 100% cash backed, which means if you buy a token from the exchange, you can be 100% sure that somebody else will buy it off you below 80 cents because they can benefit from risk-free arbitrage. Next thing which is important to note is just before a refund in a DICO, there's going to be a lot of volume, and generally a lot of volume compared to other coins, because we are going to burn 25% of the supply if the token price is below 80 cents and investors lost more money. So there's a lot of things to be said about the DICO, but there's a lot of more information in our Medium and general resources on our website. So I would suggest you, if you want to learn more about this, to go check out Medium website, etc., or join us on our Telegram channel, which is t.me/DAO Maker, DOAMAKER. Thank you for your time and hope to see you soon. Bye bye.